Welcome back to the program. Dan Gilmartin here, host of Grow Organically. I am thrilled to welcome my friend Matt Matrisian to the show today. Matt, welcome.
Hey, thanks, Dan. Appreciate you having me. I'm super excited for our conversation today.
Same here, same here. So just a little bit of background, and maybe I'll ask you to fill in the blanks here, but recently named president at SEIA. Congrats on that.
Thank you.
Great news. They're lucky to have you. Prior to that, you were at Asset Mark for about 16 years. And prior to Asset Mark, Raymond James for a little over a decade.
Yeah.
Did I miss everything? Is that sort of where
that's it. I've spent my entire career at three firms. Been in the industry over 30 years. It hurts me to talk about that, but yeah, I've been in the industry over 30 years. But super excited to join SEIA as their president back in April. So prior to that, I was with Asset Mark. Had a great run in Asset Mark. They're still friends of the firm, and really enjoy the people over there. When I left there, I was head of client growth. So that definitely pertains to our conversation today as we think about growing organically.
Awesome. Appreciate that. So let's just jump right in. So we've had a couple conversations, and in our last conversation, we talked about your approach to organic growth. I think you talked specifically about three buckets.
Mm-hmm.
I'm going to hand it over to you. Let us know what those buckets are and kind of what you're thinking, how you're looking at growth related to those three buckets.
Yeah, for us at SEIA, we really look at growth across three major categories. We are part of the custodial referral programs, which really drives a lot of organic growth for us as a firm. I think that's a benefit of being a $30 billion RIA at a large organization, is that we have been able to cultivate those relationships over a significant time period. And they do add to a lot of our growth. They're extremely important for us and our advisors. That being said, it's important for advisors to think about growing beyond just those referral programs and thinking about specifically individual existing client referrals as being a major source of growth. And when we talk about that, I think it's important to talk about being proactive versus reactive when it comes to client referrals. A lot of advisors I find are very reactive. And so when clients come across a potential prospect that they think may be a good fit, they may or may not introduce that client to the advisor, and the advisor then engages with that client or prospect when the opportunity comes up. We'd like to take more of a proactive approach. And so being able to reach out to our clients, hosting events, asking them to bring a friend, asking for the referral as part of the client engagement model and service model. Basically making sure that we're staying top of mind and helping the client to understand who we do our best work with. What is the profile of individual that we think would benefit from the services at SEIA? And so being thoughtful about cultivating those types of referrals from existing clients, I think is super important. The last thing that I'll say, and this is something that I think a lot of advisors maybe did early in their career, but maybe stopped doing, and that is seminars and prospecting in a meaningful way. So going out and delivering educational content to prospective clients and getting them to kind of engage with your firm in a meaningful way. That's really centered around, as I talked about, education. We do a lot of events around estate planning, for instance, tax planning. Those topics tend to resonate very well. For the types of clientele that we actively engage with and really are focused on, and that being the high net worth and ultra high net worth clients, we spend a significant amount of time talking to them about diversification of asset allocation. How do you think about implementing private assets into your portfolio? Being thoughtful about estate planning. What does it mean for kind of a family office type of offering for you as an individual if you have that type of asset level? So being able to structure events tailored to that specific kind of profile of client, I think is super important in a way that we try to drive prospects into our ecosystem and really kind of drive top of the funnel engagement.
And I would imagine the answer is yes, but um, are you trying to combine those two elements, the engaging your existing clients from an educational perspective, whatever that subject may be,
Yeah.
with sort of the client appreciation event and the plus
Hmm.
one? Hey, we're going to talk about
Yeah.
the thing. We know it's important to you. Given what you do for a living, you probably have some friends or people in your network going through those same issues. Why don't you bring them and make it a little bit of a party? Is that
Yeah,
the
there's
focus?
no doubt. There's no doubt that that's important. And so when we do, so there's two types of different events that I think are critical for advisors. One is what we talked about, client appreciation event.
Mhm.
How do we engage with those clients in a meaningful way and basically thank them for being clients? We run a couple of different programs. So by example, two examples that we do here locally, we often sponsor the golf tournament. And so we'll host a tent, we'll bring clients and prospects to that golf event and be able to kind of entertain them in a meaningful way. Another event that we do, there's a tennis tournament in Indy Wells every year. And
Mhm.
then we bring clients and prospects to that event and make sure that they have a great time. And so getting in front of them, being able to kind of deliver on the experience, helping those clients and prospects and know that they're not only a client and kind of having them cross pollinate with each other and kind of build relationships in their local community is super important. We may or may not have a educational component associated with those events. Sometimes we do, sometimes we don't. There's also separately, specifically educational events that we do and topics that I talked about earlier, where we will either host dinners, we might host a prospects at a local college or other type of venue. We'll bring them in and we'll go through specific details about what the importance of estate planning, what are different estate planning strategies that you should be considering in your own wealth, and how do you think about, mitigating taxes within your portfolio or specifically tax strategies that you can deploy to be able to minimize taxes? In those types of events, we may bring existing clients. It may just be a prospect only event.
Mm.
And oftentimes what we will do is we will engage with outside firms or centers of influence to be able to drive prospects to that event. So we're either leveraging our own pipeline or we're actually going to third parties and having them bring prospects to the event and getting them to hopefully be a win-win for both firms.
Yeah, that notion. I love that notion of the partnership, leveraging your COIs to bring
Hmm.
in their clients, your prospects, and have an event specific to what they're seeing challenges that their clients may be facing. So, love that. Um, when we chatted, it was a few weeks ago.
Hmm.
Um, you said something I thought was really, really important. You said a lot of things that are really important, but one thing that stuck out to me is you talked about the importance of institutionalizing organic growth.
Hmm.
Um, I, that phrase, institutionalizing organic growth, that really hit me pretty hard because given what we do,
Hmm.
I think that's a core challenge and really a core opportunity for firms to focus on. So I thought maybe you could talk a little bit about what you're doing at SEIA with respect to institutionalizing organic growth. It's not just a program.
Yep.
It's not just a marketing campaign. It's throughout the firm.
Yeah. Yeah. It's an important concept because as you've seen the statistics in the industry, they've been well touted in the media. Average RIA in our industry, organic growth rates are, call it 2 to 4% organic growth. Historically, SEI has driven 10 to 12% in our organic growth numbers on an annual basis. So that's a pretty strong CAGR versus what we see across the industry, especially at our asset levels. So that first and foremost, I think it goes to the culture of the organization. So when you think about institutionalizing organic growth, be able to have a culture of growth within the firm. And so advisors that are, hyper focused on doing a fantastic job for their clients, hyper focused on engaging with new clients, engaging with new prospects. And in order to do that, I think it's important to think about ways where we can give them additional tools and resources in order to be more prepared and to be able to execute and have more time to deliver on that growth focus. And so we as a firm try to take whatever we can do to be able to scale our operations, scale our back office, take work off of our advisors' plate so that they can spend the vast majority of their time engaging with their existing clients, doing a great job for them, and then also engaging with prospects and growing their business and leveraging kind of those referral channels that we talked about earlier. So one, scale the organization to be able to support the advisors, and then separately kind of give them additional tools and resources. So um, having advanced planning capability, having tax capability, having estate planning capability to give them more tools and resources so they can continue to go up market and to be able to capture either more wallet share from their existing clients or effectively target new higher net worth clients going forward. So one, culture is important. Giving them the tools to be able to support their growth is important. But then also as a firm, I think that there are certain things that probably larger organizations can execute on in order to better institutionalize growth. And one of those things is thinking about bringing in specific business development officers into your organization that are solely focused on capturing new clients, especially if we're thinking about some of those channels that we talked about earlier. So if they're part of a custodial referral model, having business development officers that can build the relationships with the advisors at the custodians to be able to cultivate the flow of those referrals, I think is absolutely critical. The other element too is thinking about those BDOs going out and delivering on the content that I talked earlier. So again, having the BDO be able to scale the content delivery and those presentations across various geographic areas, I think allows us to be able to fill that top of the funnel pipeline that I talked earlier and to be able to drive more prospects through the system and then get the advisor engaged once they qualify that individual client and that client wants to engage with the firm. So those two things are super important. The other thing that I would say too is that, and this maybe goes back to culture a little bit. One of the things I think that stands out for SEIA in the way that we leverage our relationships with our custodial partners is our advisors, separately from BDO engagement, our advisors also engage with the financial and consultants directly. And so they build strong relationships. So those financial consultants at the custodians really understand kind of what the subject matter expertise is of that advisor, who they do their best work with, what are some of the personalized, unique strategies that they can bring to the table to be able to solve that specific client's need. And I think that, being thoughtful about, being deliberate about kind of engaging different growth channels and different methodologies and different strategies for growth is absolutely critical to be able to institutionalize that growth story.
I love that. The sort of high level, I think that notion of institutionalizing it, from our conversations, it starts with you. And I think that's where that culture element comes in. We are a firm that seeks 10%, 15% year over year growth. We have a plan, we have a process. And it sounds like within your organization, there's sort of this ecosystem of technology, of talent and process, where you're creating great content, and that content's going out, and you're using it with your existing clients to help them bring in their friends. You're using it for prospecting. You're using it to and through your COIs. And one of the things I thought this was really interesting is that, by doing a lot of this, you're enabling your advisors to spend more time with clients. Having BDOs as part of this ecosystem enables them to focus a little less on pure prospecting, more on growing that relationship with their existing clients. saves them time, and perhaps allows them to focus on share of wallet expansion, maybe spend a little bit more time on high net worth individuals. Can you talk a little bit more about that, and maybe a little bit about, you talked about the partnerships that you have, CPAs and legal. Could you talk a little bit about that as well?
Yeah, so let's dig into that a little bit. So when you look at let's talk about the partnerships first. So we have relationships with kind of larger national-based CPA firms, where as clients have needs around tax preparation, tax strategies, maybe more sophisticated clients have kind of more complicated tax situations. We can lean on kind of firms that we built strong partnerships with, that we know that are going to be able to solve that individual client's need. At this point, we don't insource that work. We outsource it. So we're trying to find the best possible relationship for that client if they don't have an existing CPA that they work with, or maybe they want to expand out the relationship and be able to bring in more expertise depending on their unique situation. So CPAs are certainly one. We also recently hired a new head of advanced planning into the firm. And so being able to bring additional expertise from that regard to our advisors and to their end clients is going to be super important as we continue to expand that offering and department. Where we partner, though, is we've developed relationships with estate planning attorneys who will actually kind of draft the documents in-house. In fact, they share space in our location here in Century City. And so those attorneys will be able to come in. They're not part of our payroll. They're independent, but they share space. They come in, they sit down with clients to be able to draft the estate planning documents and everything. So it is a full service approach that we're trying to deliver to that client and an end-to-end solution. And so those types of partnerships are, I think, important to the end client, because feeling as though they can go to a firm and either through partnership or through internal resources, they can get all of their needs met. I think it's critical to be able to kind of expand out the value proposition for the firms. I think one of the things that a lot of firms are struggling with today is the fact that although we don't see necessarily fee pressure happening, so advisory fees have stayed fairly consistent over the last number of years. We are seeing margin compression happening. So yes, the fees are staying the same, but clients are demanding more for the fees that they're paying. And so things like tax, things like estate planning, other solutions are super important for firms to think about as they build out scale. The other thing that you kind of touched on a little bit is kind of, adding to in-house capabilities, kind of expanding out kind of your business development model. And for us, we're kind of on the cusp of doing that. So thinking, bringing on BDOs that will help our advisors grow organically, to be able to kind of nurture, understand, to be able to espouse kind of the SEIA story, to be able to deliver a consistent experience to that prospect, kind of bring them in the door. We think is super important, but still at the same time allow for the personalization and customization to that unique client. So we don't have a cookie cutter model. In fact, I was talking to one of our advisors yesterday, and she was saying, I feel like part of our secret sauce is we're kind of like a SEAL team. We go in, we engage with that client, we understand what their unique needs, and we deliver a level of personalization and strategy around their unique needs to be able to solve for whatever pain or challenge that they're dealing with, versus having kind of a cookie cutter model that this is the approach that we deliver, and everybody kind of fits within that same model. That's definitely not us. We try to build personalization at scale whenever we possibly can.
Yeah, it sounds like they either fit or they don't fit, and that's a tough singular model.
Yeah, that's exactly right.
Love the notion.
I think for some it works, right? So for some, they know exactly who their client is. They know how to plug them into a strategy. For us, I think that It's important for us to think about, especially as going up more market, you get more complex needs for that end client. You have to be able to have a level of personalization. I'll say the cookie cutter model doesn't fit with the complexity that comes in when you're dealing with, $10 million and up, $50 million and up clients. That's when you really need to be able to dig in and be able to deliver a unique solution that's tailored to that individual client situation.
And where you can't deliver it or you don't have the resources to deliver it, you're bringing in those partners, those CPAs, those
Yep.
Estate planners or trust plan, things like that to bring in
Yep.
and to be that singular source of advice with a broad team behind you. I admire that as a strategy. I think it makes a lot of sense.
Yep. Absolutely.
One of the things you talked about, and it sort of hits home for me because we try and do this a lot at Catchlight, is delivering value to the prospect right away.
Hmm.
You talked about it being one of your great differentiators. Love to hear because that's going to drive growth when that prospect is engaging and they're able to derive value before they've signed a piece of paper. I think that's awesome. Would love to hear a little bit about how you and the firm are delivering on that and. Does it impact
Yeah.
client conversion rate? What does that look like?
Yeah, so we're on the cusp of piloting a new financial planning capability where effectively we're able to deliver an initial financial plan at significant scale. So the process at this point, and I will preface this by we're kind of in the pilot phase.
Mhm.
Our expectation is that as part of that initial client conversation, so that prospect meeting, we're actually delivering a high level plan to them to be able to walk through asset allocation optimization, your Roth conversion, your Social Security optimization, your cash flow, retirement cash flow assessment, and to be able to bring them to a point where we can maximize kind of their legacy, all in that first initial prospect meeting. So the goal is to be able to engage with the prospect, send them out a link in advance, have them answer, call it 14, 15 different data points as part of their financial situation. That feeds directly into our planning software and system. We can very immediately turn around a financial plan by doing that in a matter of seconds. That then goes to the individual advisor to be able to review. And then the client can schedule a meeting directly with that advisor through their Calendarly link. And so we can very quickly engage with that client in a very meaningful conversation about their current situation, about how we might consider changing, their current plan or modifying their plan, and looking at different strategies that we believe on the surface we can deploy to be able to maximize that legacy going forward. That being able to deliver that at scale as part of that initial conversation, and to be able to immediately deliver value for that client, I think will allow us to be, differentiated in the industry. So the initial meeting is about obviously getting to know each other, but as part of getting to know each other, to be able to have a meaningful conversation about their current situation, and to go deep in a very short period of time, I think is going to set us apart and actually allow us to have an even better close ratio. A lot across all of our prospect pipelines, we actually tend to close, call it 55, 60% of the prospects that we get in front of, which I think is pretty strong. And that includes all the channels that I talked about earlier. If we can bump that up to kind of 65, 75, maybe even 80% close rate, that'll have a significant impact on our organic growth numbers that we have. The other thing too, we kind of touched on this, and maybe should have addressed this in the last question, but I think it's absolutely critical for firms as they think about institutionalizing their growth objectives to be able to support those growth objectives and those growth goals with data.
Mm.
And so being able to have a specific pipeline process through your CRM system that kind of rolls up to the organization. So individuals like myself, other leaders of firms can actually have a pulse on How many prospects are coming in the door? What's the net assets that we're bringing in on a daily, monthly, weekly basis? What are we doing against our goals that we've set for an organization? How are we thinking about our close rates going forward? What can we do to modify them? How do we dial up or dial down some of our prospecting efforts if we're falling behind or if it's affecting our budget? So being much more intentional about kind of your growth strategy is absolutely critical. And I don't know how you do that unless you actually have the data support it in a meaningful way.
100%. And to add to that, as you think about those new prospects coming in, where are they coming from? What was the source? Was it a referral?
Hmm.
Was it a marketing campaign? What are the assets of those prospects? Do they meet what you're looking for as a firm? And then, we talk about the funnel, the acquisition funnel. I think today it's probably more of a pretzel.
Hmm.
And because I think it changes from
Hmm.
one firm to the next, and it changes from one prospect to the next. You talked about delivering value, and that pretzel shape of the purchase funnel might be that somebody comes in and they have that initial conversation, see that initial plan. I think that one of the things that you didn't say is I think that's a great opportunity for if it's your BDOs or your advisors to really show off the breadth and depth of the capabilities that you as a firm deliver directly and certainly indirectly through your partnership.
Hmm.
So love that. Love that you're thinking about the numbers, the top of funnel. How many did I bring in? What's the investable assets that we can determine on them? Understanding by source, and then how are they moving through the conversion process?
No doubt. And any intelligence that an advisor can have on the front end of that prospecting process to better identify and effectively score those prospects, the much more effective they're going to be in converting those prospects to clients. So that's hyper important, especially for advisors across the industry, and certainly in the sweet spot for Catchlight.
Yeah, and well, I would say also it probably having access to data more about who that prospect is uh, psychologically gives them a lot more confidence. If they're scored really high, they have a lot of assets, they fit right in your wheelhouse. Yeah, I think that's you're psychologically you're going to go into that conversation perhaps a little bit more pumped up, ready to have that conversation, and really wanting to work hard to win that client.
Yep, totally agree.
All right. So Matt, we're almost at the end here. I've got my final question for you. And that is pretty simply, if you knew then what you know now, what's something that you would have started doing, stopped doing, or done differently 5 years ago?
Oh gosh. You know, I think that as an industry, we have a significant talent void that's upon us. Obviously, we look at the industry demographics. We know that there's going to be a large number of advisors that will be transitioning, and I think I would have been much more deliberate 5 years ago. I wish I would have been much more deliberate 5 years ago about starting a talent pipeline to
Mm.
be able to bring new talent into an organization like SEIA, be able to cultivate talent from CFP programs, college programs, making sure that we have a significant talent pipeline that we're bringing into the firm. Fortunately, SEIA has done a good job of bringing in and recruiting G2 advisors. We have some G3 advisors that we have, but quite honestly, there's capacity constraints across the organization because we are growing so rapidly. And to be able to source talent, I don't want that to be a bottleneck. So it's important for us to be able to bring in new talent. And have we started that more deliberately and have a true program 5 years ago, I think we'd be much better positioned. I think that would be the case for a lot of firms in our industry, is making sure that they're bringing in young talent that's hungry, engaged, ready to grow, ready to learn, and really want to be a part of our industry. So that to me is one of the bigger things that I think collectively all of us within financial services industry can focus on is cultivating that next gen talent.
Yeah, well, you think about great wealth transfer, and dollars are going to be shifting to next gen investors, and
No doubt.
perhaps in a way, who better to help them manage that than G2 advisors.
Totally agree. Totally agree.
Awesome. Well, Matt, you made it through the end. I want to thank you so much for spending time with us today. Really appreciate you as a partner, a thought partner, and really a thought leader in the category. Love the answers. Love the strategy that you're putting forth for SEIA, and looking forward to seeing how things develop in the next 6-12 months.
Yeah, thank you, Dan. I appreciate you having me. This was fantastic. Please, I'd love to be part of the podcast in the future. Appreciate the time. It was a great conversation.
Thank you for listening to the Grow Organically podcast. If you enjoyed this episode, click the follow button to be notified when new episodes become available. Visit catchlight.ai, where you can access all our podcasts, including show notes and other resources to keep learning. This podcast was produced by Catchlight Insights, LLC. It is for informational and educational purposes only. The content of this podcast does not constitute an offer or recommendation of any securities and is not intended to provide tax, legal, or investment advice. The views expressed are those of the speakers and not necessarily those of Catchlight or its affiliates, and are as of the date indicated, based on the information available at that time, and may change based on market or other conditions. Catchlight does not assume any duty to update any of the information. Catchlight Insights, LLC is an affiliate of Fidelity Investments. However, Catchlight and other third parties mentioned in the podcast are independent entities and not affiliated. Catchlight does not endorse any investment advisor or provide advice or recommendations to any prospective or existing client of an investment advisor as to the selection or retention of that investment advisor. This information is not intended for any person or entity in any jurisdiction where the distribution or use of such information would be contrary to local law. Third-party trademarks referenced herein are the property of their respective owners. All others are the property of Catchlight Insights, LLC. Copyright 2025, Catchlight Insights, LLC. All rights reserved.